This is the Friday, June 7th, 2013 version of the Market Plus segment. Joining us now is Don Roose. Don, welcome back.
Thank you.
We've got a lot of questions, and not surprisingly, a lot of them are concerned with the effects this wet weather is going to have on acres planted. To begin with, Martin in Carroll, Iowa, is asking, is there a possibility we could see a larger than 2.5 million acre shift from corn to beans? And what effect would that have on these corn prices as well on November bean prices?
Yeah, and those are a good question. But I think when you look at it right now, the trade's trying to dial in that we're going to have about a 2 to 3 million acre loss. And those are very much a big question mark because you have a lot of things that you have to think about. One was the 97.3 million acres that the government used in March accurate. We've seen other years where that hasn't been. And so consequently, what's your real starting number? And then this is a year where producers are really going to want to plant for the insurance, or they're going to want to plant if possible. But I think realistically, probably the corn acres are going to be down to 2.5 million. Historically, 50% of those acres go to soybeans, the rest go to prevent plant. We did have 2011 where we only went down 300,000 in that year. But as far as the price effect, you can go with that type of 2.5 million acres down, and even a yield that goes from 158 to 150, you still have about a 1.2 billion carryover. So we've got a big cushion this year like we haven't had for a long time with world competition.
All right. Now, as a follow-up here, we're talking prices. Lee is asking, we've heard for the past 6 months, as we've anticipated record crop, $4 corn is in the cards. Looking at this spring's weather, is $4 corn still in the cards, or have we bypassed that with the troubles we've had so far this spring?
I think what it really means is at one time I think that was the downside potential, if we would really get a negative situation. It still could be very much. It's going to be dependent on the weather, but you've got a number of issues now. One, we don't have the acres. We've got, the yield is very much in doubt. We're going to have to look at the heat this summer. 41% of the corn was planted in 1 week this year, so it's going to be bunched up on pollination. Then you're going to have to worry about the cold weather in the fall here. So I think realistically, take it a step at a time. I think you're going to hold above 5 to 520 going into the June 28th acres report, stocks and all positions report. And then after that, we'll see what the yield does and watch the crop conditions very close each week.
Now, as we get close to that June 28th report, since there is so much variability, we talked on the show about using those relatively new short-dated options on the board. Now, those were created to help us negotiate massive reports like that. Another good time to use them. Can you elaborate a little bit on the advantage of a short-term futures contract?
Yep, it's a short-dated option, and they come on the board on corn in January. And what you're really doing is you're trading new crop, but you're trading them like there's only a May, July, and September. So they go off the board during those time frames as a normal option would. But what it is, it protects your new crop corn and beans. At the same time, the cost, because you don't have as much time involved, is a lot less. So those are they're a new product, and I think they're a good product, and they're to be used in risk management just like a year like this year.
All right. Now, speaking of risk management, as we take a look at livestock producers, would this be a good time for, Denise is asking this, should producers be locking in feed needs now?
I always tell producers what we really do is look at the crush. And if it's a profitable crush, I certainly would. But there's always a good time to lock in feed needs. It's just a matter of what kind of management to use. But, if you're uncertain, I think this is still an ideal time to lock in next year's supply. For example, like buying a call and then maybe selling the call above it, a window contract, and then selling the put below it. And you can do a lot of those things where it gives you $1 up, $1 down for 10 cents. So I do think that with the uncertainty that we have, as soon as you see some caution, I think you should be looking to lock in. It's just a matter of how tight.
How tight and how far out in the future it would be prudent to go, depending on your operation.
Yeah, I think all of those things, make sense.
All right. Now, another question we've got, and you touched on it briefly, maybe we can go into a little more detail. As we look at, again, like you mentioned, 41% of the crop planted in a week. After the June 28th report, as we get into the meat of summer, when will the market start to really add the weather premium to the corn market regarding that pollination? What should producers be planning for as we get into the heat of summer?
Well, we're going to have this is going to be a really uncertain year. because I think we probably have risk premium in the market right now for a lot of that stuff. Mike, to be honest with you, I think we're probably trading realistically today, even though we're sitting here close to 560. We're really probably trading historically a 480 to $5 board eventually in the fall. But it's really probably going to be the August crop report. It's going to be our first surveyed crop report. That's probably going to be the first time you're going to have a better handle on what your production and your acres are going to be. That's a long time out there. It's a lot of uncertainty. You're going to have to go through the pollination in July, but I would say that'll be the report that'll key us. But we're going to have a lot of volatility this year.
All right. Now, looking back to livestock, particularly in the hog market, with that bump we saw this week, Tim in Crookston, Minnesota, is wondering if we could talk a little bit more about Smithfield, the Chinese company buying Smithfield. Would that have had an impact on pork prices this week, or is that going to have long-term price impacts, do you think, on the U.S. pork market?
Well, I think one thing we know, we're not certain, but we do know that the head people of Smithfield did say that this isn't anything that's just came out in a week. They said they've been working on it for 7 years, and that's why they probably have pushed over to ractopamine and some of the things that are friendly for exports to China. And but I think it could go both ways. It could. I do say one thing: even though a Chinese company buys the United States company, we still are in control of all the regulations and all the tariffs. So we're really still in control. But there's no doubt about it. Right now, you'd have to say it's positive from an export standpoint. So I would view it as a positive.
Certainly, providing a tunnel into China, basically, for U.S. meat.
Yeah, most definitely. So I think it's a good thing, and ownership of it, I mean, is another question. But I don't think that hurts anything either.
All right, Don. Before we let you go, as we get ready to close out the weekend, what should producers be most concerned about or prepared for as we head into next week? What are your thoughts?
As far as a grain producer?
Yes.
I think when a grain producer, we're going to keep your eye on the sky. Because, and then I think the other thing is, even if we go into this last week, it was a cool, wet week. We were down 8 cents on new crop corn. So it's more important to see how you react than the news that you see. So that's another thing. So I think it tells you the maturity of a market. Watch corn spreads, new crop corn spreads, razor close, because if they start to come in, last year the Dees July corn spreads, Dees 13, July 14, inverted 25 cents. So that's going to tell you, that's going to be your real key.
Kind of an indication of what to expect. Well, thank you so much, Don. Really appreciate you being here with us today. And thanks to all of you for sending in your questions via Facebook and Twitter. We really appreciate it. Please continue to do so. Thanks for watching and have a great week.